Hook. Everyone is obsessed with the next big tech stock or the latest cryptocurrency craze. But while they're busy chasing those trends, smart money is quietly moving to Mexico. Investing in Mexico 2026, the nearshoring boom explained, is the secret that could make you a fortune. Here's why that matters for your portfolio. The truth is, most people get Mexico wrong. They think it's all about cheap labor and low-cost manufacturing. But that's just the tip of the iceberg. Nearshoring, the practice of moving production to nearby countries, is about to unleash a wave of investment opportunities that will leave you wondering how you ever missed it. Stay until minute 8. What I revealed are completely changed how I think about investing here. Intro. Welcome back to LatAm Money Secrets. Imagine you invested $50,000 in Tulum real estate in 2019. Today that's worth over $120,000. That's not luck. That's emerging markets. And that's what we're here to explore. In this video, you'll learn 3 key things: how Mexico's unique economic position is setting it up for a nearshoring boom, the specific investment opportunities that are already generating returns for savvy investors, and how to separate fact from fiction when it comes to investing in Mexico. From real estate to manufacturing, we'll dive into the numbers and the trends that are driving this investment opportunity. Section 1: The real picture. When it comes to Mexico, most people focus on the headlines. But as investors, we need to look at the numbers. And I'm not talking about GDP growth rates or inflation targets. I'm talking about the numbers that actually matter: the cost of labor, the price of land, and the efficiency of logistics. For example, Chile's inflation is lower than France's, but that doesn't tell you much about the cost of doing business. What's more interesting is that Mexico's labor costs are lower than those in Eastern Europe, making it an attractive destination for manufacturers looking to nearshore. When I looked at the data, one number stopped me cold: the average industrial lease price in Mexico is 70% lower than in the United States. That's right, 70%. This means that companies can set up shop in Mexico for a fraction of the cost of doing business in the US. And that's not all. The country's strategic location, with access to both the US and Latin American markets, makes it an ideal hub for trade. One surprising fact nobody talks about is that Mexico is home to over 300 industrial parks, many of which are designed to cater to the specific needs of nearshoring companies. These parks offer everything from customs clearance to logistics support, making it easy for companies to set up and start producing quickly. And with the US-Mexico border being one of the busiest in the world, the infrastructure is already in place to support the flow of goods. But here's the thing: most investors are still sleeping on Mexico. They think it's all about maquiladoras and low-wage labor. But the reality is that Mexico is rapidly becoming a hub for high-tech manufacturing, with companies like Ford and GM already setting up shop. Section 2: The opportunity. While US investors fight over S&P 500 scraps, smart money is moving into Mexico's real estate and manufacturing sectors. And I'm not talking about some pie-in-the-sky opportunity. I'm talking about real, tangible investments that are already generating returns. For example, a 3-bedroom house in a desirable neighborhood in Mérida can be had for under $180,000. In Miami, that same house would cost over $800,000. And the rental yields? Triple what you'd get in the US. That's right, you can buy a high-quality property in Mexico for a fraction of the cost of a similar property in the US, and then rent it out for a higher yield. And it's not just real estate. The nearshoring boom is creating opportunities in manufacturing, logistics, and even e-commerce. Companies like Amazon and Walmart are already investing heavily in Mexico's logistics infrastructure, and that's creating a ripple effect of opportunity for investors. For example, a warehouse in the state of Querétaro can be leased for under $100,000 per year. In the US, that same warehouse would cost over $500,000 per year. That's a 5x difference in cost, for the same quality of property. And with the nearshoring boom just getting started, the potential for returns is huge. Section 3: Real Estate Deep Dive. Imagine this: you're John, a savvy investor from California, who's been watching the nearshoring boom in Mexico. He decided to take the plunge and invest in a property in the trendy neighborhood of Juarez, in Mexico City. John bought a 2-bedroom apartment for $120,000, which is a steal compared to similar properties in LA or San Francisco. The rental yield? A whopping 8% per annum. Now, compare that to the US, UK, or Australian markets, where you'd be lucky to get 4% yield. In Mexico, you can find incredible deals in up-and-coming neighborhoods like Roma Norte or Condesa. A one-bedroom apartment can cost as little as $80,000. And if you're looking for a more laid-back vibe, consider cities like Puerto Vallarta or Merida, where you can find beautiful properties for under $200,000. Here's the truth, Mexico's real estate market is still relatively untapped, and with the right guidance, you can snag amazing deals. For instance, John's property in Juarez has already appreciated by 15% in just 1 year. That's a $18,000 gain, on top of the rental income. Now, I know what you're thinking, isn't Mexico City a bit unpredictable? And yes, there are areas to avoid, but with the right research and local expertise, you can find safe and lucrative investment opportunities. Section 4, Stocks and Alternatives. When it comes to stocks, you can tap into Mexico's growth through ETFs like EWW or ILF. These funds have delivered impressive returns, with EWW up 12% in the past 6 months, and ILF up 8%. As a foreigner, you can invest in these ETFs through your US brokerage account, making it easy to diversify your portfolio. For example, you can use platforms like Fidelity or Vanguard to buy and sell these funds. But here's what most people miss, you can also invest in Mexican stocks directly, through the Mexican Stock Exchange, BMV. You'll need to open a brokerage account with a local bank or financial institution, but the process is relatively straightforward. Imagine having a stake in companies like Walmart de Mexico or Grupo Bimbo, which have dominant market positions and strong growth prospects. Section 5, Honest Risks. Now, let's get real about the risks. There are 3 major concerns when investing in Mexico: currency fluctuations, regulatory changes, and security concerns. The Mexican peso can be volatile, which may affect your returns. Regulatory changes can impact industries like energy or finance. And, of course, there are security concerns in certain areas of the country. But smart investors know how to manage these risks. For currency fluctuations, you can hedge your bets with currency forwards or options. For regulatory changes, you need to stay informed and adapt quickly. And for security concerns, you simply need to choose your investments wisely, avoiding areas with high crime rates. Here's the truth, every investment carries risk, but with the right strategy, you can mitigate these risks and reap the rewards. This is educational content, not financial advice. Conclusion. So, here are the 3 punchy takeaways. Mexico's nearshoring boom is real, and it's creating incredible investment opportunities. You can tap into this growth through real estate, stocks, or alternative investments. And with the right guidance, you can manage the risks and reap the rewards. Want to learn more? Download our free guide to investing in Mexico, which includes insider tips and expert advice. And stay tuned for next week's episode, where we'll be exploring the hidden investment opportunities in Colombia, a country that's poised to become the next big thing in Latin American investing.